All right. So, hello everyone. DayTraderRockStar here. A little aftermarket video. This video is going to concentrate on a couple different topics. One, the overall ES or the overall market conditions right now. The intraday trades that you could find using HPS methods, divergences and stuff. We'll go back. We'll just kind of outline the setups today. There were some good setups yesterday and today. The tradeometer. We'll go over some of that stuff, and then I'm going to go over a list of stocks. And this is my list, preliminary list of stocks that I'm going into for our watch list for next week. So I'll be breaking down this list, and basically, some of these stocks will end up on our watch list, our trade list. There's some of these stocks that I'm already in. So we're going to do a big update. There's 1, 2, 3, 4, 12, probably about 30 stocks I want to go over right now. So let's start off here with this. What happened yesterday? And I was going through when I get in the morning at the office. I look back here at the overnight trade and look around where European markets open up in that 3 to 4 o'clock zone, and typically we find we always see a ramp up in volume here. We definitely see that's where the volume starts to pick up here at 3 o'clock, 3:30 really. We start to see the pickup in volume. European markets open up, and we could actually see a lot of major moves. And those moves, when they get defined as a divergence, it's probably important to take them because that gives you a great opportunity. And now there was a divergence here, and I want to show you this one divergence because I use a set of indicators here. I use a stochastic, a series of stochastic indicators, different time frames, different measurements, look back periods, all the way from the 9, 14, 40, and 60. And not to go into the whole detail of how to use these and stuff, a divergence found in any of them typically is a great trade. But a divergence found on the slowest one, which is the 60 period, is really a longer term scenario that you have the opportunity to get into a trade there with a pretty decent time frame that you could hold on to and get a decent amount from it, versus the 1 minute time frame or something very short like a 9 period, which rotates real fast. I want to show you 9 divergences. I'm also going to show you the 60 divergence, 14 divergence, very similar to the 9. So you see there is a higher low here on the 60 period and a lower low on the price point here. The price here between 3 and 4 o'clock, right here 4:10, really we started to see that divergence play out. Started to turn back up above that 20 line. The price was lower than the previous low, and the previous low had stochastics under 20 line. So that's a really good divergence. And when you see it on the 60 period, it means a lot. I haven't seen the 60-minute period divergence. When I find it, usually represents a huge reversal in the market based on relative to what we look at as huge reversals. I mean, we do trade a lot of short-term opportunities, a lot of scalps for points and two, but this is definitely one of the bigger signals for, maybe possible, pivots in a whole day, going from down to up or up to down, that 60 period. So that's very important. That did play out here. And what you would do here is, when you saw this and you say, all right, I want to take this, even if you took it over here and you start to see it starting to rotate back and you can really confirm that, I don't think you're going to miss too much because this is your 60 period, and you're going to have a little bit more time in this. But in either case, whenever you take a divergence setup, automatically your stop goes right under that divergence second stage low. 2 stages of a divergence, and we'll talk mostly about the buy signals right now. But when you have that first stage, you have a low. And the only reason you can really identify this as the first stage is that you need to have a qualified second stage, and then you can go back and say, all right, first stage was the first low, second stage was the second low. Second stage has to have the stochastics higher than that 20 line. All right, and if that does happen and we're taking out the lows, that's a pure divergence, and that's where we want to place our stop one tick underneath that candle. Now you look at that candle, and you could add to your conviction if this is a good reversal candle. Also, you could add to your conviction if there was a tradeometer at this time. at the same thing. So these all work together, end up being the best setups of the day. Now, looking back at that, you can see we actually moved up. It was around 89.5, and we've moved up to 94. And then that was 7 o'clock. And not to say you're going to hold on to it at that point that long and let this thing play out, but it does give you a much better upside. And when you look back at a divergence on the 60-10, you're always going to see a bigger move versus that choppy move. This is great stuff right here. So not as frequent of a signal, but when the signal happens, don't not take it. You need to take this. You need to take this 60-period divergence all the time, and it's a great indicator for overnight when especially that 3 o'clock time frame. So then we move back up, and you're probably out of that trade, but you're waiting for another trade setup. So again, you have your nice band of stochastics. You have the 9, 3, 14, 40, and 60. We use these in different ways. We use those for identifying flags, channels, coils, all kinds of good stuff. But mostly divergences, and that's easy enough to identify when we get to see those. The one thing I like to do is try to identify and mark them off, But again, you have to learn to identify them yourself, because with me doing so much during the day, taking questions, looking at different stocks, bringing them up, we're not looking at the ES at all times. So something like this fast little divergence that happened right there, had a bigger than average move compared to, it's just. A divergence really represents a channel or a nice pivot area where we're going to break out of the previous trend. And lots of times it could be so shallow and so small because we're dealing with a 1 minute time frame that even though there is this kind of a downward trend, we did break out further than it. All right, so and then again, if you saw that divergence, you put a stop underneath it, you could see that would have held up fine. And you got a nice pop and pulled back and held that, and then eventually got up here. And look at that. That was a textbook. I was banging the table on this one. Textbook divergence to the downside. And again, 1 minute time frame, 1 minute targets. Shouldn't wait too long for this. You're not, this is different. 1 minute time frame. But if you have a divergence on the 60, that's different, because this really represents a bigger time frame. It's just that we adjusted the stochastics to measure out more candles. More candles fit into a different time frame, so we can actually and you'll notice that the 60-10 here very similar to the 5 minutes. So this would be a 5 minute, but right now this is a 1 minute. You're gonna get a nice rotation down, and then from that point on, once you get oversold, in this case, you can start to see the strength coming back. And actually, there was a divergence here, and I didn't even point this out. It was a pretty decent, what we call a double bottom divergence, and that's the price coming down here, and we're definitely holding off of that recent low. And from that point on, boom, back up. So these are the only opportunities we want to trade. These are the only reason I want to trade, and I want to point those out, and I want you to see those, and I want you to say, all right, that is the criteria. If it fits the criteria, we could look back and see it fit the criteria and how it went. And we could also find ones that didn't, fit the criteria if it didn't go, but we don't see those, because most of these work out great. That's why it's so important. 1 minute time frame, 1 minute targets, 5 minute time frame, 5 minute targets, et cetera, out to the daily. And that's why we get divergences on a daily, and we use those for the HPS watch list. The HPS watch list is what we're going to be talking about next. And those are really based off the daily time frames. These are where stocks, our ultimate trade is between 3 and 5 days. We want to get the biggest move possible in that short amount of time. So we do use options, we use stock, totally different type of trade, but perfect for, just perfect for, filling in the gaps of being a trader. You have to trade everything. You want to be able to get, see long-term setups, hold swings, take scalps. So here we have another setup. This is going into Wednesday afternoon, and this is actually the Fed meeting and the Fed decision. 2 o'clock, we kind of dropped off, bounced. really started putting in a nice trend line, held that trend line, held that pivot, pushed back. These yellow circles represent tradeometer signals, and that tradeometer signal was there. Some cases you could flush a little bit, and you have to take that with the fact that you're looking at the big picture. Now, I want to show you today's tradeometer, and overall you would say this is pretty damn good. I mean, look at this. Short, long, short, long, little bounce, long, big bounce, short, little pullback, short, top. We just had a long with a little bounce. These are pretty much spot on. Maybe the price here ticked a little lower. I don't want play that game. We look at a bird's eye view, and you can tell that we're getting very close. When you have these indicators alerting you of a spot, you have to pay attention to that spot, and then the best case scenario, you have divergence happen at the same time. That is my number one go-to trade. It's a divergence with a tradeometer. It is just it's unstoppable, and it happens. It's called a super trade. So it does happen a lot. You just have to wait for it. Channels pushing a little bit higher. We continue on, just looking at the ES, and then we're going to jump into our stocks to watch. But, this is an overnight trade. Not much going on overnight. That's why I sleep. I would kill myself if I tried to trade overnight, too, with all the time I put in on this market. But as you can see, 3 o'clock starts to become a little bit more active. I wasn't paying attention to this. I haven't gone back. But I like to go back and back test it here. This is a divergence right here. Double bottom divergence, a little pop underneath that 20, and that secondary pop was above that 20. But hard to read into. I mean, that would have been, even though it is, and you're going to take a shot, you want to have it. That's the number one key thing that you need to do, is have the market on your side. You need to have that signal, even if you're not sure about the signal. But if it qualifies, why not? If you like the area and it qualifies for a signal, do it. And most likely it is going to be one. I like those really good, pure, here's a low, here's a lower low, here's a low, here's a higher low. There's one right there. And there's a nice spike on this. And again, all based off the 1 minute time frame. 14.3 also looking pretty good on that little divergence right here. But that is a fast move, and that would have been, and it tells you when you get up here, when you're up about that 80 level, and even if you're chopping around here, it's up to you to take that profit. You might get a point, you might get 2 points, you might get a half a point. But once you get that rotation, the market's telling you something. All right, trend has been down. We have a divergence. You're going to get a bigger move higher, a little spike higher. But once you run into that overbought level, the trend can continue, and you actually move back down there. So a couple other divergences we spot. And again, let's just take a look. And normally you'll see those divergences happen at, early in the morning, during news items, where the market could flush around and chop around here. Here was a double top divergence. We actually called this. It was a tradeometer and a big double top, and that was the biggest move of the day. And that was a kind of almost a 40, it almost was a 40 for divergence. The tradeometer here kind of got flushed out, but then we actually had a nice bounce. And then we were able to start identifying some bear and bull flags on this in this market. Especially if, let's see here, there was a nice, when we have that slower stochastic band here, 60 period here moving higher, stochastics here moving lower, we hold the 20 period moving average, we tend to push up out of this pattern. Again, not much of a move. We got overbought quickly and then chopped around. And at some points, lunchtime chop, not much going on. So you really want to wait for that market to come to you, give you a good signal, especially a divergence or a tradeometer. Preferably both, and understand the concepts of the trend lines. If you're going to at least take the trade in your direction, wait for these things to rotate, and you start to get that upside momentum. Now we're going to go through a lot of stocks here, and I want to show you that example on these stocks. This is the interesting point of the market right now, because, and I want to bring this up for us. We're going to go right to the SPX. Now here's the SPX, and again, We could go back here and you could be amazed at the divergence here, the divergence here, and the divergence here. Big moves in the S&P on the daily, big move on the S&P, big move. Then we kind of get a little pullback, which is technically a channel line. Well, we got a breakout in the first retracement and then pushed higher. Now we're just banging up against this top trend line. There's the underlying trend line. There's the rising channel here, but we're really holding ground there. And seeing the strength here just tells me we want to kind of squeeze a little bit higher. But again, who knows what this news is going to do. I didn't even check the futures right now because we just heard that the tariffs have been laid out for China. And the market here hanging in there. Not much going on. So we go back out here and you start to see, and there's not much we could read into here. You know, I love divergences like this, and those are easy enough to read into. But there's nothing here to read. It's overbought. It's not a divergence, it's embedded, if anything, which is, could be a good sign of strength. So it's a tough call. Tough call. I know people are in the room right now here discussing if they expect a pullback tomorrow. Is it going to be next week? It's definitely a tough call on that. So let's take a look at the stocks that we're looking at. Now, I have a lot of stocks to go over right now. Some of them I'm in. All the stocks and all the alerts and everything that you get go out to the members of Day Trading Radio. So they get the professional charts with the alerts already programmed into the dashboard. So if those prices hit or trades will be taken, they get an automatic text message and email depending on how they want to have that delivered. So a lot of these stocks, I'm not going to go into detail, mostly for the members, just kind of an update, and then we're going to have the real members watch list tomorrow, which will narrow these stocks down. But I'm going to put this out here for now for you guys, let you see what we're looking at. And there's a lot of education that comes along with this. So Mondelez, I am in the Mondelez, and I actually think this is going to just move right back up here. And this is a big weekly channel. Came down. I was surprised that we were riding this up higher. It did break down. Came down to lower area down here. It held up, trying to get back above the 200. Truth is, it actually looks pretty good on the weekly. Weekly looks fine. It's starting to turn back up. The daily, it's kind of embedded, and we're flagging out above the 20. So these all look good, and I want to mention that one along with a lot of the other, consumer discretionary defensive sector, which we kind of go to Procter & Gamble's and stuff like that. Those have all bounced off the lows. I've got into these a little early, and I got some positions that are underwater on like Colgate and Procter & Gamble, but they're pushing back up and getting back into a positive area. And it just was sometimes you get a flush out on these. But the one thing I will say is an update on these. They're starting to look better, and if this has been a change of trend, this downward channel line, every pullback, or at least every, these are going to be potential flags, and these pullbacks, look pretty good. So Procter & Gamble, we'll set it up for tomorrow. Altria, we got Altria off of this band right here, and we got a nice move on it. It's a divergence setup off of this little candlestick right here, and it's been moving up. It has a 2-day pullback, holding the 20-period moving average, but it is starting to rotate over. No guarantees on this. But, when I do see a divergence low, typically we don't return right back all the way to the lows. We tend to put a higher low in and make another move higher. So that's what we're going to look for this one. On Altria, I'll push higher. And that's funny because Philip Morris actually is actually acting a little bit better. It was off the lower trend line. Another divergence set up at a lower trend line, holding that 5-day consolidation. We're holding really good strength here. So we're seeing if we're going to pop on those. Those are not... I do like this tomorrow. Actually, I like them going into tomorrow. I like them going into next week. I don't want to be banging that drum on this too much. A lot of people don't like these. But I do like that. There's a bank stock I have my eye on. Not ready yet. State Street Bank. Traded it back in the past. Looks like a decent enough wedge pattern. We just need a divergence and a wedge to really lock it down. And the financials, you're surprised to see the financials actually pull back here a little. Goldman Sachs looks perfect. We pushed up against that trend line. We pulled back. Today we kind of just stalled out. And we're pulling back on the stochastics. We could start to hold this level on the 228 area. watch this rotate down fast. We could easily bolt through this and higher, especially with the interest rates. Projection has gone up. And Goldman Sachs here should benefit from that. The next one here, that was PM, State Street Bank. Johnson & Johnson, J&J. Decent wedge pattern. Wedge pattern, flag. Wedge patterns usually break out in what we call a 65-75% zone. That's right at this zone right now. So everything looks good for a move up out of this little pullback flag. So Johnson & Johnson will be on in focus tomorrow. BRKB. A couple questions about that one. No position. Again, a recent, kind of a little recent divergence here. It was almost a divergence, not a pure one, but I don't. You know this is going to be a buy, but I'm not that interested in it. I'm not that interested in it. UTX, I haven't looked at that. I wrote it down. I didn't look at it yet. UTX, we traded this one off of what we call a coil stochastic channel breakout. And I banged the table. When we have a coil and we have a recognizable channel, we break out of that downward channel. So here was our downward coil, even this tighter. And look at the move we made. And we did a great job on that. Now, I'm not in it yet, but I always come back to these and start to understand why we got in if it sets up again, you know. And it's not doing it for me right now. So pass on that one. The RTN, we mentioned this. I've been talking about this on the radio. Missed an opportunity in this with the Trump summit with Kim Jong-un. Just made total sense that any type of positive results coming out of that would, you know, be reflected in defensive stocks. You know, it's like, hey, we don't need more missiles to blow up this guy. Simple. So all those stocks, the Raytheons, the Lockheed Martins, LMT, all pushing back down. One stock that's holding the trend, Boeing. Boeing actually had a contract awarded to him after the close today. I don't just watch that one. RTN, NOC is the other one. All these here breaking down. Now let's go back to the RTN. This will be a perfect 200 EMA channel line bounce. It's an HPS playbook setup. All right, you can find it on your dashboards. Go open the forum, go to playbook, and look for the 200 EMA breakdown channel line bounce video. Tells you how to trade this setup. This is a perfect lower trend line. I'm not going to set it up yet. We're not there, but I can tell you right now I have it on my sheet that I don't lose. And we're going to put an alert down here to let us know that if the price ever gets down to this level, that's where we want to. You know, it's going to be hard to get this one down underneath the 200 period moving average. It might even be a nice bounce there. It either bounces at the 200 or comes down to the lower trend line. I don't think there's an in-between here. So it looks like a textbook down the road pattern that we nail. All right, and then take a look at the cybersecurity stocks coming on the radar. Very strong. Insider buying on this one. PANW. Looking good. I was like, all right, that looks great. Then I came across proof point. PFPT. I was like, wow, that's even better. That's a nice tight consolidation up against the highs. And we could get a break of this level. We should get a nice candle. You know, just a nice continuation candle all day. We could actually break through the whatever that level is, 130 level. I mean, it's getting up there. It could maybe get in now, but sometimes you could spike down before ramping back up. Just looks absolutely good. I think it looks great here. I don't know if I'd wait for it to pull back any further. It just looks too good. So that is looking good. The Palo Alto Network looks good. So why don't we look at the Hack? And Hack is the ETF, and that even looks better. So you could cut all the BS out and just buy the Hack, which is an ETF, and it has a basket of security stocks, and all these security stocks are looking good. So Hack should continue to move higher, and that's only $39. Next one up, AWK. That's a newer position. And again, just the same setup here. First of all, you got a couple different things going here. You have a 200 EMA breakdown, channel line bounce. You have a rise in trend line, and X marks the spot. It bounced back up to the trend line. Recognizable kind of at this point, 1, 2, 3, we have this lower one. That's why we bought into this trend line right here. Possibility was there for a little further flush, say just buy it all the way down to this level, but we were bought it right on the trend line, and look, it's working out fine so far. AWK, so you got that going for you. Mondelez, we went over the Palo Alto PCRFY. Panasonic Corporation. They have a big deal with the Tesla. I would love to see Tesla take these guys out just for their battery division. You know, buy their battery division from them. But it's, you know, if you believe in the solar batteries and stuff, I have to look deeper into their, but I have a feeling this is going to be something down the road. It's a nice wedge pattern right now. It's holding under the 200. I wanted to look at it. I just wanted to show it to you. I'll do a little bit more research on it. Raytheon, STX. I have a feeling this one's a takeover candidate. It's been hanging up here right under $60 for a while. The little dip down, took out some previous lows, reversing now, pushing higher. It looks like it's going to make a run. Next level would definitely be 62 and change, which gives us about 3 points on this to the upside. So I'm actually going to circle that one because I actually like that one a lot. I haven't checked the volume on the options there. All right, so here's a good one. So I got that one lined up. Johnson & Johnson, I'm lining that one up. All the Mondelez, I might add to that. MD, I have 100 shares on that. So I might double down. That's the one I actually want to double down on. I think it looks fine. VEEV, Viva Systems. It just looks strong. Looks strong. What are you going to do about that? And then Waste Management, always a favorite. Tight consolidation, little dip, took out the previous lows, reversed higher, closed on the highs. Not much of a pullback. It's been dangling here, just drifting off the highs here for a while. And, loved garbage removal. So it's a hold in that trend line. I like it. So that's it. That's the list. Now, today on the show, we went over something special. I want to try to incorporate this into the watch list each week. And these are going to be the IPOs that are setting up. Now, there's been great IPOs recently. The IQ. Look at this thing. But the key here is to identify these IPOs in the first month and catching them either right before their first earnings release as an IPO or a public company, or right after this volume. So I've been seeing, my research today, I've been seeing that most of these IPOs would be chopping around for about a month, and all of a sudden there would be some volume coming in, and that's where the big trend would start. Now that's just one example right there. But there was a lot of other ones. The Dropbox, DBX? Dropbox, yeah. This is exactly what I want to see. I want to see the sideways consolidation, and then we're going to see explosion. Because they're not selling off, and they're not selling off. They're just waiting for people. They're waiting on a friend there. Waiting for people to get in, and then it's going to pop. That was a really nice one. The CBLK, Carbon Black. Again, sideways consolidation really for a month, and now really just starting to take off. That could easily continue. That's a tough one just to let go, because we could look back at this and we could look at any of these stocks, like the IQ stock, and see where that, this could be these candles could be little candles in the second. CBLK. So it's, I like it. I like it. $2 stop, $3 stop. I got into a oh, that's right. I got into this one today. And MRMD, Marimed dispensary, medicinal marijuana thing. I rarely get into these, but you know what? I'm tired of seeing these things just take off. I decided it's cheap enough to get a few hundred shares. There was some significant news out there. They came out with earnings. They made 81%, upside from last year. Made $2 million, whatever that, adds up to. But also heard there's some other things in the background that makes this interesting. So I picked up a few hundred shares of it as a higher risk trade. Higher risk trade. Where else? What else? WBT. We got out of this just to take a look at some of the trades we've had. WBT is a wedge pattern, dual wedge pattern. Love this setup. Right in here, and then look at that move. Look at that move. Boom. Love that setup. Wish I could have that back. Got into some AT&T recently. Picked up some calls today too. Like to see this just start to trend back up. Close that gap. Hasn't yet. News is out. Mergers finalized. Let's see what else I had. Oh, so we're looking at those IPOs. I don't want to get off track. So our job now is to look at these IPOs. I want to show you a fast way of figuring that out. Look at this one. This one really looks good. Scholar Rock Holdings, Biotech, 1870. This is one that I do. I'm going to watch this tomorrow. Holy crap, this is perfect. SRRK, and then CLPS. CLPS. That's already starting to move out. All right, so 610. So those are the three. And let me go over with you how to find those. Now, there's a good way of, we discussed this today on the show. So thank you for everyone who helped out. I know Racer did a lot of work. And got us some of the links and how he was doing some of the research there. Let's take a look here. So what we're going to do is we're going to go to the FinViz chart. All right, we're going to go to FinViz. It's a really good chart. Now you could be a member of it. Support him by becoming a premium member. But it has a lot of free stuff. There's a tremendous amount of free stuff. So I always say do the right thing, pay it forward. If it becomes useful to you, do it. Go up to Screener. It's right here. There's a lot of good stuff here. First of all, that's where we look at our sector map. Our sector map it tells us what's moving there. So you can actually get a good view of the sector map. Another great thing here over on the left-hand side of pull down performance. Sometimes you'll look at the 6 month, 3 month out, see if there's a cluster of things that haven't been working. Like, look at this, cigarettes, Philip Morris and Altria. Now maybe there's bottoming out. Maybe both of these are going to move because they were bright. They've been down for the last 6 months, down 24%. So that's why I'm in some of these, because we know we're oversold and I'm starting to see some bottom. But this is sometimes how I'll find some of those pullback plays. And we could actually look at some of those. And then, again, just the opposite. You can find the real strong ones also. So that's one way of looking at it. I also pull this down and I go all the way down here to earnings date. Earnings date. Click on that, and then now the earnings are past us now. Basically, we're done with everything. So we're going to start rolling up onto the new earnings. And you'll see the key down on the bottom here. Could get it, figure it out myself. So this is the blue is after earnings or before, or no, what is this? The blue is after and purple is before. So right before earnings is the lightest color. So Nike is going to be out June 28th. Oracle. You can see the ones that are, it's an easy way to manage what earnings are coming out. I love this little app, little thing that you could do with this heat map and really, point out some earnings, Carnival Cruise Line, etc., WBA. The ones that are behind us, the ones that are farther away are darker, 30 days out. And then actually, if you click on them, if they're very close, they'll put the date in there. June 19th after, June 28th after, PG, July, all of them. You see that July 19th before, Apple May 1st after, July. All right, so that's that. And then I want to go back up to the screener here. We're going to talk about the IPOs. All right. Here. Right here. You see it? It says IPO date. So just go out. You can go out 3 months. Probably go out, a quarter, the last month or the last quarter. We'll start with the last quarter. We also discussed that the tech industry was the best performing industry. So we can even sort that. Application software, biotech, application software, beverages. You can actually short what's going on. Next is going to be healthcare services, conglomerates, services. 4 pages of them. All right, so these are recent IPOs in the last quarter. So now we could actually look at the individual charts, and you can see most of these have popped after a month or 2 months. That's exactly what we want to be able to capture. So we're a little late on the scan. But look at all of them. You look at a Dropbox. We talked about that. LKM. That one didn't do anything. I also messed around with the last month. Really tightens it up. Then we go to charts, and then you could see these are the last month. So you could see some good consolidation. ITRM. That looks actually quite good. Therapeutics, healthcare, biotech. Just a consolidation. But like I just said, we want to pay attention to tech. Yeah, so that's that. That's a one way of actually looking at that, and we're gonna be keeping track of these because there's always new IPOs coming out, and there's always new ones that are setting up. So that's gonna be good for us. All right, so that's it. That's the update, and I hope you enjoyed that information. A lot of good information on that in that video. And if you're not a member or not a listener to Day Trading Radio, broadcasting live every day, every single day. Except, well, I'm here every day. From 8 o'clock to closing, and then even after hours, as you can see here at 7:30 right now, we're still doing some research because trading is great, and we just want to continue to make a lot of money. So that's what we like to do. So make your way over to DayTradingRadio.com, support the site, become a member. Also, if you want to learn more about the methodology, go to theschoolofstock.com. That's where I have my divergence course and the HPS methodology course. Both great courses. That divergence course is the best out there. And even I appreciate Maximilian coming on today saying how good the videos were. Appreciate that, Max. So that's it. Have a great evening. I'm not going anywhere. I'm actually sending this video out, get it out for people to reduce their own research, and I'm going to stick around and play some music for you and talk some stocks. All right? All right.